Hey guys, this is Vic from Grasping the Market and welcome to our market briefing. Yesterday, the market did new all-time highs in regular trading hours and also during the overnight session, but this time it showed much more reluctancy to continue higher, and it was under pressure for the whole session. You can see that the monthly chart still looks pretty bullish, trading around the all-time highs, and the weekly as well. We continue to trade above the previous weeks, while the daily continues the trend up. But it is inside these charts in the market profile that we start seeing a more marked weakness to the upside, and we will discuss that in a second. So far, all the time frames point up, and we have an important data release today in the form of the FOMC minutes. So, I mean, that could bring some volatility to the market. Now, when we look at the market profile, you can see that the overnight yesterday made new all-time highs. And when the regular trading hours open, it was immediately under pressure. And despite the gap, which would have been the fifth gap to the way up or on the way up, it immediately dived into Monday's profile. Important to note that the overnight had elongated a lot and had a decent kind of slash prominent POC in this area over here around the 29 area, and it was not even tested. The market immediately, broke 2 ticks higher and dived down, closing the gap. That was the first indication that the market could have been too long. And the second indication, which is my favorite one, happened through the session. You had a very strong break with responsive buying appearing around the 13-14 area. And then it managed to go back up and challenge the Monday's high, but it was very strongly rejected. After that rejection on the E period, FGHI set up like a retest, which was done on the J. This time, J could not even, it could not get sustain a move outside Mondays, but it could not reach the E low. That is a very strong warning that the market could be too long. To confirm that, the next period, K, clearly attempted higher, and this time couldn't even take the J high. So after you have the EJK highs, you have a very strong hypothesis that the market could be too long. And then the rest of the session, well, you have the same behavior on L and M, all making slower highs. So at that point, you have a pretty decent view that the market is too long. And towards the close, we saw some liquidation, getting back into the overlapping value and the overlapping POCs, and settle around the 1850 area. So yes, the day you can see a clear advancement, higher highs, higher lows, but the behavior that what happened inside of the session, the aggressiveness of the morning, attempting to recover and not being able to, tells you that the market could have been too long. Overnight, we have an open and immediately driving lower. So it is possible that the overnight will be will complete part of that inventory rebalance. We don't know that. We need to see where the regular trading hours open. So the focus for the session will be, I would say, on the late session. Value development relative to the late session range. So that overnight high that we have so far, it's a key level. If we get to find acceptance above it, that will continue the let's say the consolidation mode that we had yesterday for the afternoon session, and because it will be overlapping with Monday and Tuesday. However, if you fail to reach that area and you stay below, definitely that denotes change, and you will have a market because you will be taking probably Tuesdays and Mondays low. So you will have a market that it is in broad term balance area, and you need to see what happens then. Definitely to the downside, if the downside is real, you will challenge that weak low from Friday, which has no excess and has the gap, the fourth gap on the way up immediately below. So let's see where the market opens. I would suggest, I mean, it looks like the market will remember that the markets enter from trend to consolidation. I think it's very likely that today we'll enter that consolidation mode, trading around this 11 to 13 area where the overnight value is situated. But let's see. Probably the market will be a bit quiet towards the FOMC minutes release. So if there are any adjustments, like aggressive adjustments, they will be done probably in the morning with the market drying up a little bit towards midday. So let's see what happens. And also remember that next week is a soft week, it's a short week here in the US because we have the Thanksgiving holiday. So the market could be waiting for this FOMC to make the final adjustments and go quiet for the holiday period. So let's see what we get and trade well, manage your risk.